Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Let's jump right in talking about the biggest fundraise of the week. So the Hercle, agritech startup, successfully raised 2.1 million in funding from Opes Italia and Sparviero holding. The Hercle stands at the forefront of sustainable agriculture, boasting Europe's largest aquaponic facility, Nick. It's about 5,000 square meter of aquaponics, biggest in Europe. Very, interesting, unique elements. The funding round aligns with Italy's commitment to smart and innovative startups through Italia Smart and Start. And the idea is that the investment is also strengthened by the participation of Opes Italia. So talking about Opes Italia is one of the big sicaf in Italy working in impact-focused investment. It doesn't have a huge portfolio. It's about 5 investments, I would say, but very specific and laser-focused, including our friend Max from Develop. Shout out to Max, of course. And a few different interesting investment theses. One key element of Opes, which I thought was interesting, is what also has been used in different elements and different kind of investment, which is milestone investing. So actually tying the investment rounds according to specific deliverables. And that's pretty interesting in the impact community and definitely worth discussing.
Nice. What would be unusual in terms of investing in startups? I mean, your average startup is a software company or a tech company or a deep tech company. In this case, the Hercle is basically a very technological farm. So they produce greeneries and distribute them. And the added value and the point where I see absolutely the interest from Opes, for example, is that they produce greeneries and energy. So it's not just zero impact, but it's positive impact. So in all of their processes, they're doing, producing good, not just not doing harm. So interesting proposition, unusual type of investments from a venture capital point of view, but very interesting nonetheless.
Yeah, I mean, the future of infrastructure, actually, that's something that might be interesting for VCs also, not necessarily digital, but these new sustainable concepts that are entering agriculture in different formats. And I agree, the positive impact, that's definitely one of the key elements of this investment. So definitely a good job. I mean, aquaponics probably has been basically active for years, but no one really cracked the code, so to speak, and these guys seems to have done a very decent fundraise. I mean, I don't know much about OPEX in aquaponics, but it's not a small round actually. So kudos to them for sure. All right, let's talk about crypto. Are Italian investor back into crypto investing? Let's talk about Hercle. Dynamic trading startup achieved a significant milestone by securing 1.7 million euro in a seed investment round. Leading investors are Prana Ventures and Kairos partner SGR, together with some business angels. So the focus of Hercle is to facilitate secure transaction in the crypto world, particularly for institutions such as banks and high net worth individuals. What is particularly key is the traction that the platform had. So talking about the numbers, there is about 150 currency pairs available on the platform with about trading volume of about 1 billion. And 250,000 daily trades. So not a small feat, given all the winter situation of the past years. Still, there is some significant activity, I would say. I think what is interesting is probably the fact that they're trying to do a secure crypto trading exchange. So kind of working and underline the security element, which is probably major and probably what will allow, I believe, the crypto to survive in the future. That's really a major point. And secondly, technology-wise, they're working on low latency. So latency can happen basically on chain and on exchange, and these guys are working basically into the two aspect of latency, which is major for transactions. I mean, it's interesting. It's back in the press. What's your take, Nick?
Well, I think the first interesting point is that we have a crypto investment right now in Italy today, and we haven't seen many in the last few months. Since, as you said, crypto winter is still deep and cold. Having said that, so the Hercle as a platform positions itself in the corporate enterprise market, not just consumer trading or stuff like that. So it's a bit different. And I find it very interesting that in the current conditions, we've got a company raising money, offering a position, among its services, one of the first one, market making, because it's probably something very relevant today, even though the markets are, quite active still. They're probably not very deep. So someone offering, taking the position of market maker, can be a very important player right now. On the other hand, market makers in crypto have been beaten quite badly exactly by the crypto winter. So I mean, these guys, they really have to prove they have superior capacity and algorithms to take that role in that position. There's opportunity because I mean, an active market needs market makers, but still. It's a very brave and interesting position in the current conditions. So kudos to the founders and to the investors for this type of deal.
Yeah, what I find interesting, just reading a bit about the latest trend of institutional investor into crypto. There are basically, just broadly generalizing, there are like two elements, which is crypto exposure. So still institutional seems to have some interest in getting exposure into the correlated asset. And this still remains, it's always been there. And no matter the problems, it's still a strong element probably. But the other element I thought was more interesting, which is a custody and settlement solution infrastructure. So through the blockchain technology, it's easy to basically ascribe ownership of different digital assets. And this is an element that's probably one of the most solid into the crypto space. So institutions seems not to have lost this an outlook into the crypto space, but they seems to be very precisely focused on very specific application. So I think it's a good sort of market reaction to everything that happened. What's your take on this, Nick?
No, I totally agree with you. I don't know. I'm not so sure that today even crypto is uncorrelated to the main markets.
Good point.
But still, it's probably less correlated than other things. But still, it's probably is mainly seen as some kind of forex. When you trade on it, it's more like some kind of forex play or something like that.
Yeah.
I would object to it being uncorrelated, but I don't know. That's just gut instinct. For the rest, I totally agree with you. Absolutely aligned to your view.
Interesting. One element that I wanted to bring up is basically the kind of investment that Kairos has made. And basically Kairos is a huge asset manager, basically running multiple alternative investment funds. Is part of the Julius Baer sort of constellation of companies. So it's a massive institution, I would say. So the investment to Hercle came from Kairos Ventures ESG1 SGR, which is vintage 2022. They have about, I think, 8 to 10 million under management. So it's not a huge fund. It's an alternative investment fund, and it's focused on a number of different verticals, including B2B, life science, space, and green technology, and blockchain, of course. So it's pretty broad, pretty risky, I would say. And one element that I thought was interesting is that just here for the nerd and the statistician listening to this podcast is how essentially they add a risk indicator factor into the identity card of the fund. So the idea is this: essentially, there is a European directive essentially giving UCITS funds. Basically, they want to have UCITS some key investor information. So for full transparency and for full disclosure, they try to make certain indicators specifically valid across different asset classes, especially alternative fund. So one interesting indicator is called the SRRI, which stands for Synthetic Risk and Reward Indicator, and that's specifically for UCITS. Essentially, this is an indicator that through different calculation indicates with an integer from 1 to 7 the fund volatility in a way that is ranked, and that's basically the idea. So for people that wants to dive into the math, essentially it's a 3-step process, which it's interesting. Essentially, you take the return of the fund, you standardize on a standard distribution. And then basically, after you calculate skewness and kurtosis, there is this adjusted z-value that, Nick, I know you appreciate. It's called the Cornish-Fisher z-value for the people interested in the calculation, and essentially gives us a better idea of the return distribution. So if a distribution has a specific shape which is different from the normal, then this indicator takes that into account, essentially. And doing that, the idea is to give a better outlook in terms of risk and volatility. It's used across UCITS, so very interesting insight. My only doubt is that how well that actually fits in a very, very young fund that kind of has a very short history of returns calculation. So it's it's a good factor probably to compute when looking into funds, but again, it should be taken with the proper measure, I would say.
Yeah, I agree with your last point. That's very interesting. I know nothing. That's not my bread and butter. But when you say that you map the return distribution of a fund, in my mind pops up immediately a Monte Carlo simulation of the return profile. And when you are very early, basically you don't have the fundamentals. You haven't invested yet, so you don't have a good idea of the distribution of your portfolio. So you do it just on paper. I will invest in a company in year 1, into a company in year 2, into a company in year 4. Then you will have a distribution, and then you will apply this profile. So it is absolutely very interesting. But as you said, at the very beginning, it looks like it's missing some fundamentals. But still, I don't know about the metric and its application. It's just something that I really need to study, I would say.
Interesting.
Thank you, Jack, though. Very interesting.
No, thank you for the feedback, for sure. All right, moving on. Let's talk about cleantech startup Test1, taking a significant step forward by securing 1.7 million euro in funding from a very interesting group of investors. So first of all, LIFTT, we talk about LIFTT all the time, is one of the most dynamic investors in Italy in the past 3 to 4 years. So definitely a great team with a great forward-looking investment thesis. Second investor is Avanzi Etica sicaf, which is basically focused on impact investing, but not only that. Then we have Selected Investment. Selected Investment is a holding company from one person that I know really well, Mario Bartolini. He's a great fund manager trying to build a big sort of holding, trying to capture the best investment opportunity in Italy. Very quick, very sensitive to what's happening in the market. And Faros, which is basically a venture arm associated with CDP, focusing on the blue economy and basically everything that is helping the sea life in some form or another. So having said that, let's talk about the technology really quick. So Test1 has developed an open cell oleophilic polyurethane foam with hydrophobic properties. So it's a lot. Essentially, it's a sponge that can easily, essentially, collect oil from the sea surface without actually collecting water. So in terms of supporting oil spills, oceanic oil spills, it's probably one of the most potent tools that people can use to rescue these kind of these natural disasters. So very, very interesting product. The product is called the Foam Flex 200, among the other. And what is interesting is that the company started after the idea was accelerated through the British Petroleum Net Zero Technology Center acceleration program. It's a 15-week program that basically, at the end of which they give a grant of 100,000 British pound. And great, definitely a great technology and very promising actually. So super cool.
Yeah. As you were describing it, and I was reviewing the website, and I was thinking about what's the business model here. This is a pure climate approach. You save the ocean from oil, but actually there is a business model. It's at the bottom of the page. You use it when you need to wash the tanker and the container. So instead of pushing out the oil in the ocean, you use the sponge and you clean it. So the oil company is the customer. And that's interesting. You avoid the problem at the origin. It makes perfect sense. From the point of view of ESG, it's beautiful. Imagine BP going around and saying, we are really ESG compliant because we wash our tankers with the sponge. It's perfect.
Yeah, few customer, but customer that are like beyond
important.
Massive. Exactly. It's a huge few customer, but very, very interesting for sure. Nice. All right, so let's shift our focus a little bit about founders, Italian founders living abroad and fundraising abroad. Let's talk about Habyt. So Habyt, Berlin-based flexible housing startup, securing an impressive 40 million in Series C funding round. So definitely one of the biggest of the week. I don't know if in Europe, but definitely in the Italian ecosystem for sure. What is interesting is that the funding is spearheaded by Korelya Capital, basically French VC with a portfolio of 34 investments, among which Glovo, so very, very curated series of investments. And the company was funded by the former Minister of Innovation and Digital Transformation of France, so a very, very unique angle there. Together, among the other investors, we can also find some Italians, being them like Exor Ventures, Endeavor Catalyst, P101, and Italia 500 Azimut. So it's a case where an expat raising abroad, but also kind of bringing in some Italian investor investing abroad on Italian founders. Very, very interesting.
Yeah, very nice. We've got a trend of Italian founders being invested by Italian investors, but Italian founders are abroad. So I have to say, we've got a lot of expats doing things across the globe. So it is interesting how quite often actually we do have Italian funds managing to join these type of rounds. In this case, P101 was already in cap table and the others were already in cap table. They're continuing to invest in the company. It makes perfect sense. But it's very interesting. We had 8 deals announced this week, and 3 of them are from Italian founders active from abroad. So this is an important percentage.
Nice.
If you look at as a whole, so it says something about our experts.
I agree. Talent is definitely moving around a lot.
Talent. The good thing is that they keep in touch because we managed to invest in them even though they are abroad. So it is a way for our, let me make this parallelism, our gross national product across the globe is still, somehow related to the home country. This is good.
That's true. All right, talking about the value proposition of Habyt, I think that's pretty interesting. So, sort of the post-COVID economy, in a way. Okay, we saw digital nomads going around, housing needing to become more flexible, people moving and spending more time. It's kind of people are traveling and moving, and the digital nomad sort of wave is still active and alive. Some people would argue that also because of like the high mortgage rate, maybe millennial and post-millennial are less likely to, buy a house or willing to tie themselves into a 30-year mortgage with a crazy rate and whatever. So Habyt is right there with the future of living essentially. And we've seen a few experiments. People are experimenting abroad and in Italy. In Italy, we've talked about a few companies trying to work on the co-living concept as well. Andrea Colombo being one, of course. And of course, Habyt, it's talking about growth, actually, that's pretty interesting because in 1 year, I was researching a bit. They moved from 5,000 units on the platform to 30,000 units on the platform. Same concept, furnished apartment, really curated selection, and everything digital. So no hassle when it comes to landlord and contract. So they allow short contracts, longer contract. That's probably the future of like a short-term lease and medium-term lease for like a very specific market share of people, being it maybe on the youngest side, where they really want to move, they want to try different cities. Very interesting way of thinking about living spaces, actually.
Yeah, I've got this memory. I've got this memory of another startup doing something similar, Dove Vivo, again an Italian company. And I remember that a couple of years ago they were basically chasing one the other. So one made an acquisition and the other made an acquisition, and one made raised a round and the other raised a round. So I expect within the next 3 months Dove Vivo to announce a round at this point.
Interesting, very interesting. Let's write it down and see.
This is nice. The two of the main European players, at least European players, have been funded and are run by Italian entrepreneurs. This is interesting thing. I mean,
awesome,
surprising.
Yeah, interesting point. These guys in the real estate and future real estate business, they're growing by acquisition all the time. So it's a thing. It's a way. It's a viable and repeatable strategy to growth. Also, Habyt made a couple of acquisitions, both in the US and in Europe. And the very aggressive growth is also given by that. So maybe maybe the real cost is to build like the community, the network, the selection of apartments, and that's the easiest way to sort of connect with this assets pool, and then they can actually like grow from there. Interesting, very interesting. All right, Nick. So this concludes this week's episode of the Week in Italian Startups. So remember to subscribe to our channel for more exciting news and stories from the Italian startup world. Thanks for joining us today, everyone, and until next time. See you, Nick.
Ciao, Jack. Take care. See you in a week.